Hi, and welcome to the weekly market update for Morton Brown Family Wealth for the week of May 17th. I'm Dennis Morton here with Cody Demmel. Cody, how are you doing?
Good, how are you?
Good. We'll start with the big news of the week for Cody. You are now officially a certified financial planner. Congratulations.
Thank you. Feels great.
But we know that was a ton of hard work. I mean, it's a 6-hour exam. It's years of experience. It's a lot of, credential and knowledge in a lot of different areas. So congratulations on that. So we now have 3 certified financial planners within the firm, which is going to help because we're going deep on financial planning, taxation, estate, all those things this year. So that's going to be a really helpful set of knowledge to have. So Cody, you know that we're coming toward the tail end of a pandemic potentially when people start dropping masks and Hertz comes out of bankruptcy, right? So we have do you remember a year ago we were talking about Hertz being, going from $20 down to nothing and people were buying in? Well, here they come back. And it was the first of the meme stocks. It was the first of these story-driven, social media-driven stocks that have just been popping up over and over again. And the Robinhood traders, day traders, young traders were really driving this market. Fidelity came out with something this week that might be a little bit of an antidote for that, for those young traders who got caught up in the meme craze. What did Fidelity announce this week?
Fidelity is letting individuals aged 13 to 17 open their own accounts as long as their parent also has an account at Fidelity. So, I think that's a really interesting and smart thing for them to do, and hopefully it turns out good.
Yeah, so it's going to be free trading. They can buy ETFs and stocks and Fidelity mutual funds. And eventually when they turn 18, it becomes a brokerage account in their name. The stats were pretty crazy on why Fidelity might have been doing this. So what's been happening with kind of the new account openings and the demographics for them?
Yeah, so they opened 4.1 million accounts in the first quarter of 2021, and 1.6 million of them were for individuals 35 and under, which is an increase of over 200% from last year.
We've talked a little bit about just what it meant for more retail interest in the stock market, people diving in and purchasing, GameStop or other these stocks. What's the opportunity here for, imagine for a listener, they have a grandson or a granddaughter, they have a child who's a teenager who's expressed interest in investing, they've heard a little bit about it. What are the things that could be learned by having an account when you're 16 years old?
I think there's a lot of good things that can be learned, and unfortunately there are some bad if they follow just individual stock advice that they see on Twitter or other social media posts. But I think the good and dollar cost average in, instead of the same amount they want to start investing every month going forward from a summer job or any other job that they may have through the school year, that would be very beneficial.
Yeah, I think paying attention to emotions, for anybody who's invested in cryptocurrency or SPACs right now, their emotions are being tested. They're well off their highs and there's a lot of volatility there. And but that's a learning experience. You kind of learn what you can tolerate. So when there's bigger money at stake, maybe you're more attuned to, how much risk you can afford to do it. We talked about this the other day. It would be interesting for them to start experiencing what successful investors actually do, which is not much. Right. Investing is much more quiet and deliberate process than people might think. It's not AC/DC with a wall of Bloomberg screens behind you and just frenetic activity. It's a lot more deliberate, right?
Yeah, I think obviously CFAs at some of the firms are doing that every single day, but as financial planners, that's not what we're doing all day, every day.
Right. I think the more you can develop patience, it serves as an antidote to that social media mindset a little bit, which serves well. We saw a stat in the Wall Street Journal over the weekend that I think something like among teenagers, only 13, 15% read a long form book or piece of content every day versus 60% in the 80s. So attention spans are just kind of going down to here. If you can build attention span, then apply it to investing at a young age, that's probably pretty valuable. Another area where we've seen a lot of activity, we saw some amazing statistics, is in the homeowners. So here we're shifting from young investors maybe to mid-career people who've been on the move. What were the numbers from 2020?
So there was a lot of really surprising numbers. First, so we hit the record high for a single family home. It's up around $329,000. It's up 20% from last year. And I think obviously there's a number of different reasons for why this happened. The supply has declined 50% from the same numbers they were last year. And obviously a lot more people want to be having their own home and not stuck in the cities. We saw obviously a huge jump in demand too.
Yeah, I mean, so in some of these hottest markets, you're seeing places like Columbus and Cincinnati and Kansas City, Indianapolis. It's places where higher quality of life, lower cost of living, that type of trade-off. The most disturbing part were the numbers on when people are doing this, just kind of jumping first, asking questions later. What were the stats on people buying without seeing?
That number was really surprising. 63% of individuals made a bid on a house that they did not see in person. So whether they saw a tour online, it's still very surprising to see 63% of the bids were made from someone who never even stepped a foot inside the home.
Right. Those kinds of decisions are tricky. Have you ever heard like the anecdotes of people who say, yeah, in retirement, I'd love to run a bed and breakfast. Well, they used to do these things, I don't know if they still do, but where you'd actually get to go and run a bed and breakfast for a couple of weeks to realize how much work it actually is, and maybe that's not an ideal retirement. And with buying a house, there's no like trial run. You can't go in and say, hey, I'm going to go live in this place. And it's not like buying a stock where you can unload it the next day if you regret the decision. That's a big move to do sight unseen, right?
Yeah. And then another very surprising stat is 18% of the individuals were waiving the inspection, which was up from only 6% were doing the same thing last year. It's up almost 300% from the numbers of last year.
So not really concerned about what's under the front porch or just that roof that's missing on the back of the picture.
Yeah.
So, I think it speaks to, again, there are trade-offs and everything. There's no free lunches. These are great conversations. If you're in a relationship and you and your significant other, your spouse are talking about these things, like really come down with a list of things that you'd be giving up and a list of things that you'd be gaining. I mean, I remember my wife and I, we always joke that we're 18 years into our 2-year plan in the Lehigh Valley. Like we were here for a couple of years, like, yep, we're leaving soon. And after a little while, we went, wait a minute, what are we giving up and what are we gaining? And thought, oh my gosh, we're giving up a lot of stuff here and the trade-offs don't make sense. So I think the home ownership decision and the transition is a great opportunity for couples to talk and really lay out what you have and what you're giving up. So the last piece we found this morning was from MorningStar on the 3 tricky decisions that people make about retirement. The first of those was something that is really unknowable, which is the right withdrawal rate. Cody, we've talked before about, the 4% rate, what's the right rate? And they said the reason this is a tricky one is that inflation, rates of return, and life expectancy are completely unknowable. And I think those things, we're really aware of those right now. Inflation, we've been able to ignore for a little bit. It's percolating back up. Rates of return are getting a little bit choppy. And I think we've talked about that idea that we're kind of an uncomfortable conversation sometimes is the thing you can control is spending less, right?
Yep. Yeah. I think the main thing that they dove into is just making sure that you're flexible with your withdrawal rate, not trying to lock into a certain percentage, because obviously we're going to have different returns year by year, inflation expectations year by year. So being flexible with that withdrawal rate is really important.
Yeah. And I think we're going to be leaning into that this year. We've talked about 3 phases of planning heading into 2022 is what are the things we do in 2021? How do we income plan for the years ahead based on taxes, returns, interest rates, all that stuff? And then estate at the end of life. So it kind of plays into all of those. The second tricky decision was on long-term care. That's another unknowable one. 50% of people will need it, 50% won't. Are you in that bucket? Can you self-insure? It's one of those things that, you have to kind of step back and be really clear about what you can afford to do and how much you want to insure against that yourself. And then the last piece is whether to purchase an annuity. We've talked about annuities before, but there's a temptation there to get guaranteed income. But in the author's piece, there's no such thing as a general annuity. They're all so different and so uniquely composed that it's hard to get it. Cody, what was the line that really jumped out at you about the guaranteed income conversation?
Yeah, the line that he said is the starting point when thinking about lifetime income isn't an annuity, but you should focus on maximizing your payout from Social Security.
That's the decision that really matters. It's the one that comes in. If you can lock in a government guaranteed income stream for the rest of your life, and then back into every other conversation about guarantees, because it's always a balancing act between guarantees and that flexibility you're talking about. All right, so I'm going to finish up today with conversation about some reading materials. I'm going to start sharing some content and some things to read and listen to. And these books are really kind of timely because they're foundational, but we found a list from Investopedia about best books for teens who want to learn about investing and thinking about money. So we'll post to that in the email here that we send out this week, so you can take a look at this list. But there's one in particular, a guy named Ramit Sethi, who's written a book called I Will Teach You to Be Rich, which is a process that he uses to really help young people or people at any stage develop their money mindset. He came from a very modest background, has accumulated wealth in a particular way, but he's very thoughtful about how he thinks about growing it, distributing it, giving it away, and how people can find financial freedom, at different stages. What do you think are some lessons that people could stand to learn earlier or even at any stage of life about money from reading long form?
I think it's really important to definitely read some books of just investing in general, or just listen to some podcasts of professionals, and not, especially the younger generation that's on Twitter and TikTok and the other social media, is usually those people who are putting out those short forms they have a dollar into the position that they're trying to sell or that they're pushing. So making sure that you're just following a professional overall who's just talking about investing, I think is really important.
Yeah. This is the season. This weekend I had the earbuds in, doing some gardening and listening to a couple of investment-related podcasts, peripheral investment-related, but finding those long-form voices that really help to inform your opinions. Again, it's that antidote to the ebbs and flows that we've been seeing this year that can be so volatile. So,
yeah.
All right. Well, if there's a topic you'd like to hear us discuss in the future, please let us know. We look forward to catching up with you soon, and I wish all of you a happy spring.